Hello, dear students. Today I will tell you about basic accounting terms which are useful for preparation of accounting equation and understanding the rules of debit and credit according to modern concept. First of all, I will tell you about assets. What are the assets? All valuable things owned by the business institution which increase profit earning capacity are known as assets. You can say that these are the economic resources of any business organization, and these are always presented in the monetary terms. These assets are used for earning profit. There may be different types of assets. Mainly, there are two broad categories of the assets. One, non-current assets, and other, current assets. Non-current assets may include fixed assets, intangible assets, or investment in immovable property that is also treated as an asset. Fixed assets are those assets which are used for a long time period, like machinery. We don't purchase machinery again and again. We are not purchasing machinery every day, every month. Even we don't purchase machinery every year. We purchase machinery one time, two times, three times in the lifetime of the business institution. In the same manner, land and building, it is also called fixed assets. Why? Because these are used by the business institution for a long time period. Vehicle, car, trucks, if company is purchasing or any firm is purchasing, these are treated as the fixed assets of the business organization. The fixed assets is treated as a non-current assets. Non-current means which are not current, means which are used for a long time period. Intangible asset also is treated as non-current. What are the intangible assets? As name suggests, there is no physical existence of these types of the assets. You cannot touch, you cannot see these types of assets. Like goodwill of the firm, means reputation. That is the asset of the business institution, because at the time of selling the business institution, we can recover value of the reputation also, value of the name of the firm also. So that is very helpful for increasing the profit of the business institution. The goodwill is treated as an asset. In the same manner, patents, that is also treated as asset, but does not have physical existence, cannot be touched, cannot be seen, but helpful for increasing the profit of the business institution. So these are the intangible assets. If you are not using any land and building, but you have some idle fund, and that fund is invested for some time period in the immovable property, that is also treated as an asset. Because after some time, after 2 years, 3 years, 4 years, you will be able to sell these immovable property and you will earn the profit in the name of business organization, because you have purchased that immovable property from the resources of the business organization. That is also treated as the fixed assets. In the same manner, from the business resources, you may purchase the shares, the ventures of any other firm, any other company. You may invest the amount in the partnership firm. That is also treated as asset. Investment. These are called investment. If it is done for a long time period, so that is the non-current asset. Maybe fixed assets, intangible assets, investment in immovable property. All of these are the non-current assets. Second category of asset is the current assets. Current assets are those assets which are used for a short time period in the day-to-day working of the business institution. These assets may be converted into cash at very short time period, say 1 year. Say cash in hand, cash at bank, stock, debtors, all of these are the current assets. Why current assets? Because we are using these assets in the day-to-day working of the business institution. These are also known as circulating assets. Why? Because there is a proper circulation of these assets. We have some cash. We can use that cash for purchasing the goods. If goods is available on a particular date, that is known as stock. After selling that stock, we will recover the cash. Again, that cash will be used for purchasing of the more goods. Means there is a proper circulation of that. That's why these assets are known as current assets. If we exclude stock and prepaid expenses from the current assets, then these are known as quick assets. Other name of quick asset is the liquid assets. Means there's a liquidity in these assets. Liquidity means convertibility into cash. At a very short notice, say maximum 3 months, we can convert these assets into the cash. But prepaid expenses cannot be taken back easily. Stock cannot be sold without any significant loss immediately. So we exclude stock and prepaid expenses out of the current assets for calculation of the liquid assets. So these are the different types of the assets. There are some other assets also we will discuss later in detail in any other video, as per the requirement. Now next basic term here is the liabilities. What are the liabilities? Because sometimes amount invested by the owner is not sufficient. So what we do? We take loan from the outside. Means firm have to pay back that amount in future, including interest accrued on these types of the liabilities. So liabilities are the obligation or debts that is taken by an enterprise and that is payable in future. And definitely we are taking loan in the form of cash. That cash will be used for purchasing the assets, or we will use that in the day-to-day working of the business institution. So these liabilities are known as creditors' claim against the assets of the business organization. Because if firm is not able to pay back that liability, then amount will be recovered by the lending institution by sale of asset. Liabilities also are classified into two categories. One is non-current liabilities and other is the current liabilities. Here also non-current liabilities means which are payable after a long time period, say after 1 year. That is the non-current liabilities. Bank loan. If you are taking loan from the bank for 2 years, for 3 years, for 4 years, for 5 years, even for 10 years, any time period which is more than 1 year, that is the part of the non-current liabilities. Companies issue the debenture to the public which are payable after 1 year, that is also treated as non-current liability. Means basic rule is that these liabilities are payable after a year. Current liabilities are those liabilities which are payable within a year. As name suggests, current. Short time period. I told you already about that. And short time period means here 1 year maximum. That amount is payable within a year. Creditors, outstanding expenses, these are treated as current liabilities, means short-term liabilities. Even if loan has been taken from the bank for a short time period, that is also treated as current liabilities. Now another important term which is used in account is the capital. I think most of you are aware about the capital. Capital is the amount invested by the owner in a business institution. And not only amount, if any asset is brought by the owner for use in a business institution, that is also a part of the capital. Suppose there is any personal building, an owner is investing that building in a business institution, means that building is used and ownership is transferred in the name of business institution, then this is also called capital. And according to principle of separate entity, capital is treated as the owner's claim against the assets of the business institution, because owners and business institution have separate legal entity. So capital is an obligation and claim on the assets of the business organization, because that amount brought by the owner is used to purchase the assets. And in case of winding up of the firm, definitely these assets are sold and amount of capital is recovered, if possible. The owner's claim against the assets of the business institution is known as capital. Now another important term is revenue. Now we have discussed about liability, we have discussed about the assets also. For example, a firm have purchased the assets, have taken loan if sufficient amount is not available. Now actually firm will start the work. Goods will be produced or goods will be acquired for the purpose of sale. The amount recovered by sale of goods is known as revenue. Revenue is the amount received or receivable by sale of the goods. It is actually in narrow sense. In wider sense, if we discuss revenue, so revenue is the any type of income of the business institution. It may include commission received, interest received, dividend received, rent received. All of these are also part of the revenues. Not only amount received or receivable by sale of goods. So revenue is the very wide term. Actually, revenue is used for calculation of profit at later stage. So first of all, we have recognized the revenue in the business institution. So we will calculate what is the total amount of the sale, cash sale as well as credit sale, means amount receivable also is considered according to the accrued system of accounting. And if we are earning the amount, for earning the amount, we are spending some amount also. We are getting some services also. We are consuming assets also. The cost of assets consumed or services during the year is known as expenses. Matlab in the process of earning the revenue, we have to spend some amount. For example, you have purchased the goods from Delhi. Will you pay travelling charges? Will you pay carrying charges for transfer of the goods from Delhi to your station? Yes. It is a part of expense. You have to appoint some person also, as clerk, as cashier, as manager. Will you pay salary to them? Yes, you have to pay. It is not charitable institution. The person is coming and serving free of cost. We are talking about business organization, and business organization always started to earn the profit. So we have to pay salary to them, to this person. That is also part of expense. There are different types of expenses. If broadly we classify, there are two categories of expenses: direct expenses and indirect expenses. Direct expenses are those expenses which are spent on producing or acquiring of the goods. Purchase. Related to purchases. That is the direct expense. And indirect expenses which are related to sales, distribution office, administration, or finance of the business institution. So these are the 5 basic terms of the accounting which are very useful for maintenance of the accounting equation and for understanding the rules of debit and credit according to modern concept. Why according to modern concept? Because according to modern concept we classify the accounts into 5 categories, and these are the 5 categories of those accounts: assets, liabilities, capital, revenue, and expense. So it is very important basic knowledge you must have for understanding these concepts at later stage. Hopefully, you will be able to understand these basic accounting terms through this video. Thank you. Thanks for watching.